Hey there, Jody Amend, mortgage advisor with Universal Lending Home Loans. And if you would please subscribe to our channel so that you receive notifications when we put out new videos, which is usually 2 to 3 times a week. Today, I want to talk to you about credit. What is a credit score? How is it determined? And why is it so important? So a credit score is a numerical snapshot that reflects your overall credit history, both past and present. It is a snapshot at a particular point in time, and your credit scores can change generally every 30 days. Your credit scores can go up or down depending on several different factors. For example, if you pay your payments on time, if you open up any new accounts, or if you close any old accounts, or as your balances increase or decrease. Now, there are 3 major credit reporting agencies that we use in the mortgage industry, and most creditors do as well. Those are Equifax, TransUnion, and Experian. Now, your scores are going to vary just a little bit from credit reporting agency to credit reporting agency, and there are a couple of reasons for that. Number 1, not all creditors are going to report to all 3 agencies. So for example, if you have a medical collection and they only report to Equifax, then your Equifax score is most likely going to be lower than your TransUnion or your Experian. Additionally, the credit reporting companies each have a slightly different algorithm. So they could be looking at different things to determine those scores, so they can vary just a little bit. So credit scores are used for so many things, so it is so important to know where you stand with your credit scores. Credit scores can be used for applying for a job, if you're shopping for auto or homeowners insurance, taking out student loans, buying a car, opening up credit cards, and of course, when you are purchasing a home. And your credit scores are going to determine not only if a creditor will lend you money, but also how much and at what interest rate. Now, just a note here, your credit scores are only one factor in what a lender is looking at to determine whether or not they're going to lend you money. They're also going to be looking at things like your job history, how much money you make, how much other debt you have, and possibly your assets. So typically, if you have a higher credit score, you're going to be charged a lower interest rate and therefore a lower payment. If you have lower credit scores, you're most likely going to have a higher interest rate and a higher monthly payment. Now, credit scores can range anywhere from 300 to 850. A credit score of 580 or lower indicates poor overall credit and is a much higher risk to any lender. A credit score of 580 to 669 is fair, still a little bit higher risk. You may be able to still borrow money, but you will most likely pay a higher interest rate. A score of 670 to 739 is good, and 21% of Americans fall into this credit score range. 740 to 799 is very good. You should have no problem being approved for credit, assuming that your job history and income meets their guidelines. You should also receive the most favorable loan terms and a lower interest rate. And a credit score of 800 to 850 is exceptional, and only 20% of Americans have a credit score over 800. Now, the credit reporting agencies, Equifax, TransUnion, and Experian, each have a different credit reporting model depending on the type of credit that you're applying for. So there are credit reporting models for insurance, consumer debt, such as personal loans, credit cards, and auto loans, and of course for mortgages. And your scores will vary from model to model. So you might apply for a credit card and have a 700 score, and then apply for a mortgage and have a 740 score. And the reason for that is, depending on the type of credit that you're looking for, their algorithm is looking for different things to help determine that score. Now, the credit score requirements are going to be a little bit depending on what you're applying for and what lender you're applying with. So for example, if you are applying for a mortgage with Universal Lending, we're able to lend you money if you have a minimum credit score of 580. But again, this will vary from lender to lender. Now, I'm sure you are wondering, how is a credit score actually determined? So there are 5 different factors that the credit reporting agencies are looking for to determine your scores. 30% of the weight is given to the amount of money that you owe in relation to your total available credit. So for example, if you have a $1,000 credit limit on a credit card and you have $500 charged on your credit card, your ratio is 50%. And ideally, creditors like to see you using 30% or below of your available credit. So you might want to make sure you keep that balance at 300 or below. 10% of your credit score is going to be determined by new credit. Typically, when you open a new credit account, it can lower your credit for a short period of time, and then each month as you make those payments, those scores will go back up. 15% of the weight of your credit scores is given to the length of your credit history. So similar to new credit, the longer the payment history and the longer you've had an account open, the better. 10% of the weight is given to a credit mix. Ideally, they like to see a mix of different types of credit, revolving like a credit card, installment loans like a student loan or an auto loan, and of course a mortgage. And then 35% is given to payment history. So the greatest amount of weight is given to your payment history. Payment history is an indication of how likely you will be to repay that loan. So it's very, very important that you always make your payments on time. And additionally, it is a really, really good idea to monitor your credit. You can use a company like Credit Karma, or you can order your free annual credit reports at annualcreditreport.com. Now, when you're monitoring your credit, you may see some inaccuracies on your credit reports. And if you do, you can dispute your credit report online through annualcreditreport.com or through Credit Karma. Now, if there is something that's inaccurate and you have disputed it, the credit reporting agencies have 30 days to reach out to the creditor and verify that that information is accurate, or to remove that from your account. So just a few more important things that I want to go over regarding credit. A few years ago, there were a couple of laws that were passed regarding credit to help protect consumers. The first one is regarding credit freezes. So the credit reporting agencies used to charge to place a freeze on your credit, and then they would charge you another fee to remove the freeze. Now the FTC passed a law that requires the credit reporting agencies to place the freeze on your credit within 24 hours after your request, and to lift the freeze within an hour of your request to do so. And now there are no fees to do either one of those. And additionally, in 2017, it was determined that nearly 1 million children were victims of identity theft, and 66% of those were under the age of 8. So there was a law that was passed that allows parents to create a credit profile for their children and put a credit freeze on their credit until they are at the age where they actually need to apply for credit. And again, there is no cost for that. So in summary, if you are looking to get the highest credit score possible, number one, you need to know what your credit scores are. You need to monitor your credit and to make sure there's no inaccuracies. You also need to use your credit. So you need to establish a payment history. If you have open credit, but you're not using that credit, there is no payment history to show. So therefore, your credit scores are not going to be going up. Don't close your older credit accounts. If it's an older account, even if you're not using it, keep it open, because those older accounts are showing a longer history of having credit and of making those payments. You also want to keep those balances at 30% or below of your available credit on those revolving accounts. And most importantly, make those payments on time. Now, you can go through Credit Karma or another company like that, or annualcreditreport.com. But if you are actually applying for a home mortgage, we can pull your credit. We can let you know if your credit is already good enough for you to get pre-approved for a home, or we can run your credit through our credit analyzer, and we can let you know what you can do to increase your credit scores, to possibly get you into a better loan program, or to get you a lower interest rate. Sometimes there's very simple things like applying for a new credit card, or using your credit, or paying off a credit card possibly. So if you are thinking about buying a home and you're not sure what position you're in, or if there's some work that you need to do on your credit, I would love to help you. I love helping people with their credit. I totally geek out on that. So reach out if you have any questions or if you need any help. And again, if you would please like our video and subscribe to our channel so you can get notifications.